Hello, and welcome to the video presentation for the Merger Market and Ernst Young Report, Asia Pacific Private Equity Outlook 2013. Faced with growing macroeconomic uncertainties and volatility in the United States and Europe, private equity investors are increasingly turning their attention east to Asia Pacific. Private equity activity in the past year has been impressive. According to merger market data, deal value totaled more than $33 billion, with a third of that activity occurring in the fourth quarter of the year. Expectations hold that this deal activity is likely to continue in the year to come, with particular emphasis being placed on Southeast Asia and other emerging markets across the region. Yet despite the rising sophistication of private equity in Asia Pacific, challenges still remain. Foremost among these is the increasing presence of strategic corporate buyers, cash-rich and on the prowl to make an acquisition. Similarly, local funds are also stepping into the arena, many of which could prove to be sharp competitors or valuable partners going forward. The question then is, has private equity found a new home in Asia Pacific, or is this a passing phase until markets in the United States and Europe thaw? Also, how are private equity investors adapting to this new region as they make buys, improve assets, and prepare for the exit? To answer these questions and more, Merger Market sat down with Ernst Young's private equity leader for the Asia Pacific, Michael Buxton.
I think what we're really seeing in Asia is just really a lot more interest. Some of it clearly is opportunistic, but it's hard to really go away from what's happening within particularly the developing markets within the Asia Pacific region. If you look at the central thesis that most investors have of the very fast growing middle class, particularly in markets like China, you have significant urbanization. There just is an incredibly positive underlying story to really back up investment. And that's reflected in the recent private equity survey that we've done, where 85% of respondents expected significant increase within the Asia Pacific region in the next 12 months. Obviously, China was a heavy focus within this, but Southeast Asia also had a significant level of interest. And whilst everybody knows the story of China, Indonesia has become something that has had a lot more interest over the last couple of years. We're starting to see funds looking at the Myanmars, the Cambodias, the Laoses, all of those markets which continue to develop. So I think, when you look at it for the foreseeable future, Asia is going to be a significant source of activity for the private equity industry. I think, if anything, the story of Asia, having been in the market for many, many years, is one that it does actually take time to develop relationships, become established within the community. And to me, that's really fundamental to doing deals within the marketplace. And I mean, that's one of the key findings within the report, that very, very high reliance upon introductions, relationships. It's just a very, very key part of doing business within Asia. Asia is all about the longer term, and it does take longer to get established. But we've seen with many of the funds that have come within the marketplace that whilst it may have taken them a little bit of time to get established, once they've become established, they've been incredibly successful in both their investments and their exits. Fundraising comes up a lot in conversations. I think it's fair to say that the marketplace is relatively challenged. When you look at it, those funds that have a good track record, a unique niche, a really good story, a really good thesis behind them, are tending to find fundraising relatively easy. Those that don't are tending to find it relatively difficult. I guess it's, at the end of the day, money is flowing to quality, basically. When we look at sectors, the report this year is not so different from what the report last year. I mean, clearly energy, mining and utilities are always very high, and consumer, and to be honest, I don't think that's a big surprise, particularly if you look at consumer in the broader context. I mean, the big investment thesis here is the growth of the middle class and the increased affluence of the middle class, and clearly as that continues to happen, there are going to be more and more opportunities. Yeah, I mean, if you look at the challenges that the survey has tended to raise, number one, not unexpectedly, is the macroeconomic environment, which clearly continues to be difficult in most of the geographies. Europe clearly being a significant feature in that. I think we are seeing the increasing regulation. I mean, respondents specifically talk to increased regulatory pressures within China and India, but across the board we're seeing more regulation. Private equities and industry in most jurisdictions is coming under more scrutiny. I guess the other challenge for private equity in the Asia Pacific region, and particularly I think we're seeing this in Southeast Asia, is just the number of local cash-rich corporates that are relatively acquisitive and can come up with good pricing on a lot of transactions, which are proving to be significant competition. No, it's definitely true that we are seeing an increase in local funds, and to be honest, that's not surprising. I mean, you've got a number of factors happening. Clearly, people who've worked in the bigger global funds are entrepreneurial by nature, looking to set up their own businesses. Some of the local banks and others have started to set up their own related private equity funds. Is that going to change the market? No, clearly it is, but I think it's the nature of any market that you're going to have some global players, you're going to have some regional players, and you're going to have some local players. They're often playing in different parts, different deal sizes, different parts of the economy. Clearly, some of the local funds are going to have a lot of advantages in terms of knowledge of the local marketplace, connections, etc. But I think there's place in the market for local funds, for global funds, and for regional funds. It's all around your investment thesis, the quality of your people, and the top firms will be successful in all those spaces. I think it's fair to say that the last year hasn't been a particularly good year for exits, mainly because the IPO markets, which tend to be the main source of exits for private equity within the Asia-Pacific market, have been relatively closed. I think at the moment it looks like that 2013 isn't going to be so significantly different. IPOs are still probably going to be somewhat limited, but what we are starting to see is a growth of a market in secondary exits. You are starting to see more trade exits, resales to sponsors, etc. But I think it's probably not going to be a big year for exits in 2013. Private equity brings a real value to the business. I mean, one of the interesting observations to me is that we see it consistently every year that a business that has been invested in private equity not only outperforms its peers of listed companies whilst it's in private equity ownership. Whereas we look at the survey this year, again, more than 50% of participants are talking about involving operating partners and others, and see really value creation as being significantly important. And I think that's a massive move for the industry in this part of the world.